Hello, everyone. Good turnaround Tuesday. Alexander, Stephen, everybody. Looks like the invasion trade is getting unwound a bit. Here's gold. So you have a test of the breakout. So far successful. I don't think you want to see gold close back under, say, 1845 to 1840, back below this high. Right now, people could say this is just a break to buy. There was no breakout in silver. Okay. Yeah, traded above 61.8, but didn't get to 78.6. Similar situation, confluence of support at 23. Everyone see that? Stephen D. Oliveira, try decaf. Ryan, how are you today? James Wilson, nice to meet you. Jays. So
you all right?
Yeah, doing okay. So they're unwinding, the invasion trade. I don't know why. Was there some movement or anyway? The euro got hit hard Friday on safe haven buying. So a little of that fear is coming out of the euro too. What are you thinking here?
Yeah, we've had another morning of ping pong headlines. We had it's really strange. We had headlines hitting the wires that Russia were pulling troops out, but really all they're doing is they had drills. They brought a load of troops in to do the drills. Now they're taking all those troops out. The way the headlines hit, everyone's it's a de-escalation of buy risk, and the impairs jumped, and then you read the details and you think, well, nothing's actually changed. There's still 100,000 troops sitting on the border. There's still all the equipment sitting on the border. They did a drill and they stopped the drill, or they completed the drill, and that's it. And now they're doing more drills.
I actually heard a general saying that would be Putin's out if there was some kind of deal and he wanted to de-escalate or withdraw. He could always say, there was never, like they've been saying, there's no intention ever was of invading Ukraine, and we were just doing military exercises with Belarus, and that's it. And we got crude to 95, so we made a few extra shekels, and we'll just maybe move a few troops back for a month or so and then do it again.
Yeah, then Putin goes and buys some calls, sends Lavrov out to through talks of possible messages, and everyone's a winner.
Yeah,
but I get the fact that some people might have thought that the drills were a precursor to an invasion, and that move always takes that risk away. But nothing's changed. There's still 100,000 troops sitting on the border.
Yeah, hey, good morning, guys. I was just gonna say,
morning, mate.
They how many troops did Russia pull?
No one's counted yet. There's a few pictures of
10,000 troops
and whatever.
Yeah, it's like 1/10 of their force. I mean, this isn't over, but the market sure is trading it like it today.
Yeah. So if the market gets more and more comfortable as days go by, that's all it takes for moves anyway. So I'm wondering what you're thinking here, Blake. Did this come off your breakout line too, the gold?
I mean, 1850. I mean, this is it. I was actually thinking about getting long a little bit of gold this morning when on this dip down to 1850. I didn't though, because we have producer prices, and and that's this morning, and that's here in the next 25 minutes. And one of the things that I said on the week ahead video, for those of you that remember the weekend video, is PPI is going to be a big piece of data. And I actually mapped this all out on the week ahead video. I said, gold's going to run a little higher based on this Russia news, but if we get a reversal in gold, just like what we're seeing today, and then PPI comes out weaker, and I was talking about possible de-escalation. I said on the week ahead video, I don't see how this is going to, evolve at this point. I don't see how it's going to escalate much further. Anyway, that's what I said this weekend, and I said gold probably will come off as a result. But if we get PPI data that comes in a little weaker, as many analysts and economists are expecting that inflation has peaked or we're near a peak. Anyway, if producer prices come in a little weaker, gold could completely slump and reverse back through 1850, like we're seeing, and that would set up for a false breakout in gold. And you got to be careful with gold here, really do.
And here's the 10-year. So this news event, if it's a hot number, we could get one final high. We won't be confirming this high. Maybe we go to 210 or so on a hot number. So S&Ps love it. I'm wondering what you're thinking, both Ryan and Stel, that we had a pretty good pullback in Euro Pound after that big move a few weeks ago, and wondering if you think this was a decent zone for longs to see if we can have another wave, maybe similar to this in magnitude.
As traders are always looking for more. If we got to move down to the low 83s, I was hanging around with my Hoover. To pick some
I would just guess by eyeball.
Yeah, this is a bit middling for me.
Yeah,
it's a bit middling.
I agree. Good morning.
Morning, mate.
Good morning.
I agree with what Ryan said. I would be looking at the very low 83s, those lows again. I think that's a very nice risk reward trade, because your where you're wrong is pretty clear. So it's
under 260, under the spike low.
Yeah, something like that. Yeah, something like that. Yeah. Speaking about the S&P, it's funny because before this whole Ukraine situation started, we were looking at higher yields and equities were a little bit shaky, and then Ukraine came up, and now it seems to be all okay for whatever reason, and now equities are going back, screaming higher. It's almost as if they don't remember that, hey, we're still in an environment where we have rising yields, tightening from pretty much every major central bank, and this is not a good recipe, at least in the short term, for equities. So I'm looking at this rally and I'm like, yeah, this needs, I think it should be getting sold into. And we talked about metals. Remember yesterday when gold and silver were doing really well, and we said, don't for longs, don't count your chickens yet. Where this is not breaking out yet. And look, we're right back. And if we learned anything from these past couple of days, is that when there's really potential trouble, you go to safe haven assets, right? So what moved when there seemed to be proper trouble? Bonds and metals. Bonds were bought, metals were bought, cryptos were sold, equities were sold. Yeah. And now risk on, it's the exact opposite. Equities, cryptos are rallying, bonds are selling off, metals are selling off. Just something to keep in the back of your mind, what the knee-jerk reaction of markets that are not panicking, but are thinking seriously about a bad scenario.
You know what I just noticed pulling up a daily here? Every bear in here had their stop over this high. Look they just took it out by a few bucks.
Yeah.
This high all the way back here was 1877.15. So by 240, they took it out, and now whoever had their stop, they're going, well, I'm glad I'm out. Looks like it's going to 2100 now, but. That's good. Blake has said it. The best trades are false breakouts are big trades. So, it could end up, we're talking about maybe it's not ready for longs. Why can't it be ready for shorts? And the rally in silver was anemic comparatively. So I think our patience and resisting FOMO for getting long this stuff still is going to be rewarded.
Yes, we're still in kind of no man's land, and we have to wait.
But every time I see a rally like this or this, I go, I missed it, and we'll see.
Yeah,
I don't know if we have yet, and Aussie, doesn't look terrible. And one thing, if this is real in crude, I think this 128 level is so important in Canada. Blake, you have a lot of alerts here, so I'm thinking you agree with this 128 level being significant in the loonie.
Oh, it's very significant. Absolutely. I think that the dollar CAD is bouncing around between the 126.50 and the 128 level, but and it's in a like a slight channel, whatever. But I'm really right now I'm more I'm more concerned. I'm more interested in the Euro Canadian. It's something I picked up actually this week already, and it's something, but I've been talking about it for the last week and a half. I actually did it on the trade-off video with Pepperstone Securities with Chris Weston a week and a half ago. It was like my setup, one of the setups I was looking at, and I'll show you guys. This is how I really want to express. I want to express the crude short side of crude is going to be through the Euro Canadian, and I was looking at this dip right here as possible buy candidate. And the reason why, I'm really targeting a lot of these Euro currencies. Euro sterling, I think, plays similarly, Euro dollar, but again, this is more of a play against this big rally that we've seen in crude. As once hopefully we get past the Iranian stuff too, but we have the nuclear deal. But what we have to do is get past like this whole Russia, maybe a de-escalation. Crude starts to come off, but you play the Euro Canadian to the long side, because I think the Canadian dollar is going to be a great short, but I think the euro is going to outperform the dollar. So, all these Euro currencies have false breakdowns, like the Euro Canadian here, but this is a long-term 50% retracement. So if you go over to a weekly chart, you can see what I'm talking about. This is, the low from 2012 to the high back in 2018. This is a 50% retracement. We basically probed below it, broke down enough to get traders, short out of longs, and got a double bottom, completed that. Now, you have a couple breakout points here, 144.50, then above the 200-day moving average. Then once you clear the 200-day moving average, you clear this resistance, you'll get a move up towards the 151 level. So that's what I'm looking for. And that's
very interesting way to express a, short-term bearish crude's going to come off type of thing instead of doing the crude. It's lower beta, isn't it?
I think so. I'm a believer that the euro is going to 117. So, at least 117. So this is a way to express that trade via currencies, and that's how I'm doing it right now. But anyway, that's just kind of you guys were talking about the euro sterling, which, by the way, I think is an also, I'm playing it on the long side right now myself. I think that's also a good trade. As we've hit the 618 retracement, we bounced. This is another one of those false breakdowns below the lows. Both Ryan and Stelios have been bearish, this pair as we hit 83 pence. And, I know Ryan closed up his shorts down here and, played it perfectly, over the last 6 months. And I know Stelios was picking up on the long side down here. I mean, this is where, you have the false breakdown. A lot of people don't believe that the UK Bank of England is going to be able to live up to the interest rate hike expectations. So, a way to play it is probably right through here, because there's so many people that still think that pigs are going to fly before the ECB raises rates. Are you guys one of those? You guys are in the Eurozone, Steve, Stelios. I don't know if Steve's here, but Stelios.
Well, with inflation where it is, German inflation is above 5%. And inflation everywhere is high. So, the central bank has a mandate. They can't just ignore it. And unemployment is also dropping. So, they have every reason to do it. And like we've said so many times before, the number one problem with people now is inflation. You ask anybody.
Greece is 6.2% this morning.
What was it? Sorry?
Greece was 6.2%.
6.2. I'll tell you, that's not the real number. Anyway, yeah.
What's the real number?
That's just Steve's bar bill.
Man, I mean, seriously, schools and medical bills and all that, that's 10% easily. Anyway,
How about food there?
Food,
any
yeah.
shortages on the shelves?
We don't eat food anymore. We can't afford it. No.
They grow all their own crap. They have goats and they just eat feta. They're fine. Yeah. They got olives.
All right, let's go.
We actually do.
No, I'm just kidding. But I tell you what, best feta, best olive oil, face of the planet, obviously, is in Greece. So, but what do you think, Stel? Do you think that the Eurozone, the ECB is going to raise rates? I mean, they have to, right?
I think the market is going to be pricing rate hikes. Now, whether they're going to go forward with it, I don't know. But the market is going to be pricing hikes. And
then let's talk about the flip side of that. Ryan, what do you think about, and I know K-Man's listening, and if he wants to chime in here, I mean, what do you guys think about the Bank of England here? I mean, are they going to be as aggressive as the market thinks that they are going into 2022?
So far, we had a very, very hawkish meeting last time. They almost hiked 50. So, the next 25 is done. And, I think they're going to hike a few more times. But the question is, what's going to be happening to risk assets worldwide? And what's going to be happening with the Fed? If the Fed, for whatever reasons, takes the foot off the accelerator, then the other central banks are going to be, they're going to feel a little bit more at ease to do the same. So the Fed's leading everything.
Yeah. If the Fed hike only 25 pips in March, that's potentially a dollar sell. The Fed makes that hike and you sell the dollar because it's not 50 pips.
Right.
But against the Bank of England, I still think, yes, they are going to be forced to turn more hawkish than the market thinks. Whether we get that last shove in Euro sterling, I've still got a small piece of my short on just for interest, but I'm looking now to really flip that around longs in Euro sterling down at that 83, 82.75 area. And so,
look, guys, I should bring back Danny Blanchflower, and he's probably the dove, and ask him what he thinks about what the BOE is doing.
There you go. Bring him on. K-Man, I heard K-Man unmute his mic. See if he's got some comments here.
Hey, good morning, everybody.
Morning, mate.
About the ECB, I think the rate hikes are, priced is a big word, but people are already, like the Germany 10 years, they've done their high this morning. They're already trading at 30 plus BP now. So I think we're still in ranges, to be honest. I still think Bank of England will be ahead of the ECB. So I'm only half believer that we have really seen the bottom in euro sterling. But the thing with the ECB is, if they really start to bring or to normalize the monetary policy, because they're forced to. First of all, Lagarde is going to try to downplay it as we need to do it a little bit the same as Bailey was doing a week and a half ago. But we can't forget that euro is such a big block, and if they start to move, it's going to have a similarly dollar effect in euro crosses versus the smaller currencies, I think. So indeed, there is a case for the euro to go up, and I don't think it's going to be so much against the dollar. But there is a case to make for the euro to start to trade higher versus other currencies because of the importance of the block.
Yeah, so
to start to hike, and is the market going to see the deposit rate normalization from -0.5% to 0? Is that real hikes, or is it just okay, we're going back to 0? I'm not 100% sure how the market's going to take this.
Well, it's interesting. I want to say that K-Man, here's our chat room, guys. If you don't know what the ForexAnalytix chat room is, this is just all this morning, just kind of chit-chatting a little bit here. But what's interesting is K-Man, this is, maybe 45 minutes ago, right about here. No, here. So K-Man pulls up wait, that's not the one. Sorry. He pulled up this one, talking about the EURCAD right here. And I said, you know what? He was talking about, and I'm like, you know what? Whoops, that wasn't it. Then I said, I'm long the EURCAD since yesterday, and we started, chit-chatting about this. This was, like I said, about an hour ago. This is the ForexAnalytix chat room, guys, if you guys want to see, kind of what happens there. And that's not even giving you guys the trades room, the macro chat room, the news and research room, the Spanish chat room, not even talking about any of those. This is just the general chat room. That's kind of a conversation that K-Man and I were just having. So this goes along with what you were just saying. Maybe the euro can rally against some of these other crosses, right? So why are you targeting the Canadian? You probably heard what I had to say, but I'd like to hear what you have to say.
I'm looking at all the crosses, and I was just looking around the whole spectrum of euro pairs and what's happening to oil, and this one popped up, and we have had pretty decent moves on that one lately. So I was thinking, I was like just wondering, where are we in this one? And so just putting up a few levels as well. The other thing, why there is a reason though for EURCAD, because if we say, okay, the tension is coming down, let's assume that the tension is coming down in Russia and stuff, which is far from a done thing, and oils are starting to come off a little bit. It's likely that gas is also going to come off a little bit, and then we are talking really about the Euro's garden, because they are big gas importers. So if gas would come off and oil would also come off, Euro Canada is probably going to be a cross where you want to be long in that case.
Right.
Yeah,
so well, really take off actually.
Right. Okay. Well, there you go, guys. So just a few ideas from K-Man and inside the ForexAnalytix community. But guys, I just realized the time. Let's shift gears a little bit. Let's talk about producer prices that are coming out today. So, I'm going to take us back over here, pull up the data flash, and let's take a look.
What gear are we going into here?
What's that?
What gear should I?
We're gonna downshift a little bit. We're gonna downshift back from overdrive back into fifth gear. For those of you that don't know how to shift a manual transmission, you youngins out there.
Just quickly, if I may, like on the you're talking about the expectations for the ECB and where the euro can move.
Yeah.
Just to put context, if we're at peak Fedness for what they're going to do, we're at first and second steps of what the ECB can do. So there's a hell of a long way we can go with this. And
that's where you really start to talk about the divergences of central banks. Matter of fact, I did a interview with Michael Brown, which it'll be out. Was it out this morning? I don't know if it was out this morning.
No, not yet.
Not yet. Okay. So Michael Brown, on Trader Summit, we talk about the divergences between central banks, and that's going to be that's going to be a hot topic moving forward, right? Yeah, big time. All right, but let's talk about producer prices. So, here's PPI. What are you guys thinking today? I mean, I personally think you're going to start to see inflation data at the producer level start to come down, whether it was in February or in February or not, because we'll get the February data. Is we getting February data right now?
No, January.
January.
Sorry. Okay. Whether it's the January data, or not, there's still a risk that we get a hot print today, but it's something that we need to pay attention to, because as producers, as everybody here knows, if producers start to feel less pressure, the less chances they're going to pass that on to the consumer down the road. So PPI data is going to be pretty important today. What are you guys thinking here?
My view is I think eventually it's going to ease off, but as long as energy prices keep just going up, and they have been going up, right? I mean, oil has been on a tear for the past months. I don't see how that's going to be abating, anytime soon. So we're expecting about 9.1% year on year for a PPI, and that's down from the previous reading. Yeah, I think eventually it's going to stabilize and it's going to come off. But at the moment, I think we're going to. If there's going to be a surprise, it's going to be to the upside. Just my humble opinion.
Ryan, do you have any opinions there? And by the way, I do feel this. If we do get a weaker piece of data today, stocks are going to absolutely go on a tear because it's already squeezing everybody who's short, thinking there was a double top. You know, everybody was targeting 4,300 in the S&P. Here we are near 4,500. I think the equity markets are going to absolutely go on a tear today if that data is weak.
They're going to love it.
Yeah. What do you think here, Ryan, regarding the inflation data?
I think we've got to be aware that it's a volatile number. You know, it's not like CPI, although that's volatile at the moment. PPI is very volatile. You know, you can get 10, 100 pip swings in this thing. It's going to be important. We've already had the CPI, so the market knows there's inflation there. So this is just going to give an indication of whether that's going to continue to feed in, because obviously PPI probably lags CPI quite a bit in terms of actual movements back in. But the other thing I'm looking at carefully is the Empire State Manufacturing, which absolutely cratered last month from 31.9 to minus 0.7, which didn't paint a good picture for manufacturing. There's a decent rebound, is expected at 12.15 today. That could set the tone for manufacturing because it's the first number of the new month. So that's one I'm keeping an eye on as well.
Okay, so it's not like you're ignoring PPI. It's just you're going to pay attention. Yeah, okay.
That's Fed data, so that's why we're hitting the new month and PPI is Jan data. So it's putting a foot in both worlds.
Got it. Okay. Well, and I want to talk about the S&P here in a second. But K-Man, did you have anything you wanted to? I don't know if he's still here.
No, I'm still there, but no. And I actually agree with Ryan. Keep an eye on those manufacturing data and real data to know how we are going forward. I think inflation, everybody knows it's there, and I think the growth data are going to be much more important.
Okay. All right. Very good.
Gold sitting right on the breakout, Blake.
Yeah, I'll let me talk about the S&P and then I'll run over to gold. So real quick, here's the S&P. We had this double top, break below 4450, double top target takes us to 4,300. We stopped yesterday at the 618. So, and if you use ForexAnalytix, I'll just show you kind of some of the analysis that comes through ForexAnalytix. So yesterday, intraday update right here. The S&P is at the 618 retracement, but the double top doesn't complete until we hit the 4,300 level. And that is the risk for anyone being bullish at these levels because we were talking about the double top. And then, but we hit the 618. When we hit the 618, we have bounced. And as a result, it's catching traders that are short, on the short side, catching them wrong-footed. So if inflation is weak, the S&P is going to continue to rally. Now, look, I'm going to go back to gold because gold, again, we talked about this on the week ahead video. I mapped it out how.
Oh, it's underneath the breakout by a lot now.
You rally past the breakout point, right? Above 1850. You hit the 127% extension. You get a reversal because Russia starts to de-escalate, and then you get a weak producer prices number. Gold's going to have a false breakout, which could lead to an eventual breakdown. And this is something, again, I talked this whole situation through on the week ahead video over the weekend for the free video that we put out. So I talked about this whole scenario, and it's playing out just as I expected, which is kind of scary. What's going to be more scary is if we have a weak producer prices number and, gold just really slumps. And that's going to be scary if you're long gold because false breakout leads to breakdown. We could end up, trading back down towards 1,700 in the weeks ahead. And I know a lot of gold bulls would absolutely crap their pants if that happened. All right. We have 30 seconds till data comes out. Any last minute wishes? Last minute meal. Oh, I should tell you that the S&P is currently
wear diapers.
We are doing a very good job of building out that head and shoulder pattern, just so you know, longer term. That
don't eat yellow snow
chart every couple weeks. What's that? It looks like.
Don't eat yellow snow, wear diapers.
Yeah. All right. There you go. Don't eat yellow snow. All right. So here's a 15-minute chart of the euro. Let's put up the S&P as well. Somebody rattle off the numbers as they come out.
It's coming out now. 3.1 Empire States, so weaker than expected. PPI not out yet.
So not so
So
much of a big bounce.
hot data?
No, not really.
Oops. Dang it. That was a little too big.
That was for Mr. Magoo.
Oh, 1% month on month, so stronger than expected.
So it is stronger than expected.
Year on year hasn't come out yet, but I'm sure it's going to come out soon.
That's a hot monthly number. Okay.
Yeah.
So that's
9.7 year on year. There you go. Told you the risk was on the high side.
Well, we got inflation. Now, the flip side to all that is everybody expects higher inflation, right? So, I don't know if I'd chase the market short here. I don't think I'd chase the S&P on the short side here. Matter of fact, I think looks like the euro is going to just take off. to be frank, and that's scary because if you're long gold right now, you're thinking, man, that was a pretty hot piece of data, and I'm long gold. Think about it, like you just bought it at 1847 spot, right? Like let's say you just picked up gold because you're like, hot data, buying gold. And just let me get over to gold just so we can walk through this. Hot data, buying gold. That means great. You need to see a break above 1855, right? You get a break above this 1853, really. You break above 1853, then you can breathe easier. But if you can't get above that spike high right there and that spike low, and you're long gold on this hot data, you're going to have some problems, I would think. Euro's hitting new highs, by the way. All right. Well, look, guys, we got a little bit of activity with the euro hitting highs. Got some gold action trying. And I'll tell you where the action is going to be in about an hour and a half. Yep, an hour and a half from right now. This webinar is happening. You guys make sure you're there. We are making a huge announcement for, I put it in the chat box, for it's free to attend. We're, quite possibly we could change the way that you guys operate in the trading business.
I'm calling it, Blake?
What's that?
I'm calling it the ForexAnalytix Great Reset.
The Great Reset. Well, okay, I'll go with that.
Right.
But it's something that could really change the way that you trade the market. So
I've just had a look, Blake. I think there's only about 10, 15 places left, so people need to get a move on.
Thank you, because if you guys don't know this, we use Zoom, and there are only a limited amount of seats. So
Blake's cheap, as Dale said.
It's either the exponential cost of expanding the room size is it's like when you rent a hotel space, like those
presidential suite
stuff. Yeah, you go up to a bigger room from one room, and it's like the costs become exponentially bigger. Zoom's the same way. Anyway, all right, guys. Well, hey, I'll see you guys at that webinar. K-Man, Stelios, Ryan, Dale, our coaches with the mostest coaches. Coach, that didn't sound right. Anyway, I tried, Dale.
All right. Well, thank you, man.
Thanks for having us here, and have a great interview. I'll see you guys on the Morning Edge. The ForexAnalytix subscribers, I'll see you guys on the Morning Edge in about 45 minutes. Thanks.
Thank you, team. Thanks for sharing everything out there today. And Sala, welcome back to F.A.C.E.
Hi, my man, Dale. How are you?
Okay, how are you? Is it really your birthday today?
No, it was yesterday. I was.
Oh, okay. That's why you're. All right. Well, all right. Belated. Happy birthday to you. Happy birthday to you. Happy birthday, Sala, my trading warrior brother. Happy birthday to you. And may this year be green, buddy.
So great. So awesome. Thank you. It was lovely, Dale, my boy,
I hope
my mate.
It's one of your best years ever and in all ways. So, well, What's on your radar?
Oh, there's a bunch of things on my radar right now. I heard that you talked about the PPI, and I was expecting that we will stay on that level that we have been previously seeing. And it's actually the fact that we are still on the same level. And actually the topic is, and the story will still be the inflation topic. I mean, again, we see that there is a huge pressure. I mean, to be honest, without making the deep dive, look on supply chain on the world, look on energy prices that we have been talking, not only because of the tension that we have seen between Russia and Ukraine. So there are many factors that still drive inflation, and whether it's transitory or not, I don't want to discuss this topic because it was so much.
It's been beat up.
Exactly, beat up so massively. But if we just look on the market, we see that there is a big divergence between what is the market expecting to be the inflation in the next upcoming years and what it is right now. I mean, if we look on the tips, I made a small 20 days before, which I just give me 1 second, where I just actually compared what we have been seeing in the tips and the treasury.
There's tips, 10-year tips right there.
Exactly. They are right now almost at minus 0.69, so 0.7. And real rate interest rates are almost at almost at -7. So the market is actually expecting that inflation will be decreasing significantly in the future, while actually this gap between the real rate is really high. So one of these charts would be wrong in the future. Either the market itself, because the estimation led by the tips shows us that we see a decrease, or we will see a much higher inflation, and this could increase the rotation on the markets. Actually,
well, let me ask you this, Ala. Yeah, you know, you're really kind of well versed in the fundamentals of markets. Do you think central bank policy, especially the Fed, BOE, is going to be successful by creating a pretty nasty recession to bring prices down? Are they going to have the stones to stick with it, because that's what it would take? Would be a pretty ugly economy to get people to stop buying food, right? I mean, how are rates going to correct any, like, besides supply chains, just the agricultural commodity markets, which are on fire? How will that work out?
I mean, everybody knows the most powerful tool that central banks have is the power of communication. So
jawbone it.
Absolutely. So what I think is it will be a tough time. So it will be not, we are talking about interest rate hikes in the US, let's say 2, 7, whatever. It depends.
Do you remember the statement, or am I, dating myself prehistorically, where they used to say 2 steps, which are like 2 hikes, 2 hikes and a stumble. That by the third, the things were starting to cave, that it became too much medicine. Do you think that would apply to what we're facing here?
Absolutely. This is a nice anecdote. Absolutely. Totally agree. And I think
that's what I do. Anecdotes.
Perfect. And that's why.
And also James, I will keep my day job. I'm not going out on tour anytime soon, so that's it. I hope you recorded it. So yeah, go ahead, Salah.
Yeah, and this is what, to make a long story short, in terms of monetary policy, I think it will be a tough time for central banks. Everybody's looking on the Fed. Are they going to stick to this aggressive move, or are they going to change? So everybody's looking to the Fed, and I think it will be a tough time. So they will use the tool of communication. I mean, the power of communication, and this is where I believe in. But of course, inflation is the big topic. There's no other discussion about it. There will be rate hikes, and we will see a rotation in the market. Actually, we already see the rotation in the market. Let me just take something out here.
You mean from value and tech?
Exactly. And if we look, actually, the first month of a year is really important for me. I don't give outlooks before the end of January,
Okay.
because
As January goes the rest of the year.
Absolutely. Maybe
Okay.
people out there, they would say, oh, this is a funny thing. I don't believe it. But there are a lot of factors and variables that I look on, like this December low. December low should not be crossed in the first 3 months of the upcoming year. And we see that the NASDAQ, for example, all lost their December lows. The first 5 days have been really shitty on the market. The January performance was bad. So there are a bunch of indicators that we use from seasonal patterns, for example, that show us that this year started really bearish and we are in a midterm election year. So there's a bunch of factors that drive this rotation, and we see it going back out of tech into value, like you said, or energy. For me, commodity prices and commodity will be really important this year.
You know, that 15.5, before we get away from it, looks like an excellent bull bear line that, you know, if you're above it, you could be long. If you're underneath it, you're short, and you use it as a pivot to trade against. I mean, just looking at this now, if we rally to 15.5, I might try a short up there.
Exactly, to pull back, and absolutely, this is what I'm looking for, and this is
a great looking pivot I haven't seen before, and you're the first one to come on, Sala, to talk about January being a harbinger. I've been hearing that for years. Always, you know, people even nail it down to each day of the week equals, I don't know, a month or a quarter. Some people have different variations on it.
Absolutely. And one other concern that I have, if I look on the down Friday, down Monday effect or event, so make it clear, if we see a bad Friday or a negative Friday following, or a Monday following up exactly also negative, this might be a warning signal for the market. And this year we had already a down Friday, down Monday. This was actually an additional January bad bias, showing you exactly, oh, there's a warning signal coming. And what did we see? Friday bad, 7th January, Friday bad, Monday, 10th of January was bad, a wonderful turnaround Tuesday, and then it was going down. And exactly Friday and this Monday, yesterday was also a down Monday. So we get a second warning signal already. Sorry, I need to correct it. It says 11 January and 14 January. No, it's February, of course. But we see already a second warning signal here, which is, additionally making some concerns for me that stock markets will be under pressure and still stay under pressure. And fundamentals are now really important. I mean, the last 2 years, if you would start trading 2 years ago, everything was going long. It was a wonderful dreamland for everybody to go on the stock market. And now you will see a bunch of fundamentals will care. I'm a technical analyst, so the majority of my filter setups and trading ideas are based on technical analysis. But anyway, if you look on Netflix, Facebook, or Meta today, all these tech companies will be under pressure. Everybody will check their guidance, check their fundamentals, whether they are profitable in the future, whether they can be against this pressure or not.
Yeah, definitely. That's where most of the damage has taken place. So I got a question from an attendee. What can I explain turnaround Tuesday? So I'll give them my definition and you confirm it or add to it. Turnaround Tuesday is just a trading pattern that if you have a market that closes strong on a weekly basis, which is Friday, you normally get follow through in that direction on Monday, and possible fades occur on Tuesday. And, you know, it depends on your time zone, but, you know, last night in Europe was a pretty good turnaround Tuesday in Europe, how they turned gold around and all the invasion, they unwound the invasion trade. Is that what do you believe in turnaround Tuesday, Salah?
Yes, I observe it, and
Okay.
I use it also for my trading. And
Okay, well, that's enough. If you risk money on it and have it be, part of your, well, it's Tuesday, maybe I should be looking for something to fade, then yeah, if you risk money on it, you must believe it.
sure, absolutely.
Right? Yeah.
Absolutely. And
So I'm sorry I went off on a tangent, but where were we on this? So you're talking about the Aussie now? Up
yeah,
there?
yes, I checked the Aussie, and I have actually I created a trading idea now in the Aussie. We have an inverted head and shoulder formation.
Okay.
Actually, we spotted it.
Yeah.
And what we now see is actually a chart book pattern. Why? Because we have seen this breakout. I'm trading now more than 14 years. This was one of my biggest mistakes in the past, saying, wow, it's the breakout. I'm going to take it now. But I was always too late. But you need to wait up. This breakout was good, but the confirmation now is the pullback back to the neckline that we have seen now. This is one opportunity or one setup for me to take at least short-term longs on Aussie dollar.
Do you think the dollar has peaked? Is that what your work is telling you, or is there one more hurrah on the dollar here, Salah?
I don't think that it peaked for this year. I think there is still potential in the dollar, but at least on a short-term basis, if I combine it now with technical analysis, with seasonal analysis, and with this fundamental push of commodities that Aussie dollar can have as a strength, I see a possibility to have at least a handle above 0 spot to 72.
Okay, you're looking for it to take out the recent high we had before the pullback.
Exactly.
Okay, got it.
And what I want to show the audience as well today, if we look on the Bumidi bands, Dale, you already know them, and you can use them by TradingView actually for free. You can use the script. If you type in Bumidi bands, you can just put them in your chart. And what we can see today, again, we had nice reversals in the DAX, and this shows me that we see a nice turnaround Tuesday today, a bullish momentum, but still there is concern about this.
Look at the gap. All it did was fill the gap to the left.
Exactly. So maybe just give me 1 second to explain the Bumidi bands. This is an implied volatility indicator. So you have an upper Bumidi band and a lower Bumidi band, which you can calibrate, but now it's based on 1 sigma, so 68% probability that we close the day in the bandwidth. Yesterday, we broke out. We didn't come back to the bandwidth. Okay, this can happen, of course, with extreme fear or euphoric. But what did we see today? DAX started in the morning positively through this decrease of tension between Russia and Ukraine. We headed up immediately to the upper Bumidi band. We tested the Bumidi band and we reversed back into the bandwidth. Now, with the upcoming start of the US opening, we have seen a second bullish momentum crossing the upper Bumidi band. And what we can see now, we are reversing again back into the bandwidth right now. We just need to see what is coming with US opening. So what you can see is you can use the Bumidi bands on an intraday basis to spot invisible support and resistance, because this is really important to grab this information, because I'm creating this indicator by using implied volatility indices, like here the FODAX or in the S&P 500, the VIX. And
I'd like to be in the Bumidi band. I play lead guitar and sing.
You see?
What do you? I wanted to ask you something for my edification. Why do you use 34 close RSI? How did you choose 34?
Okay, good question. I use 34 because it's a Fibonacci number.
Okay.
Number one. And B, I want to be out of the box. And C, I tested statistically, I tested this 34 handle. It helps me a lot to spot for me my own setups. What I do is I don't look on oversold and overbought. I just
look for divergences.
Of course, I look for divergences, but I look also on a barrier that is really interesting for me, which is the 80. Oh, sorry, just let me check. Which is 48.5. Let's see. So really easy to say. If we are above this barrier, we are on a bullish environment. If we below, we are bearish, and really important are the crossovers that we can see. So if I see a crossover from below to the upside, it gives me more confirmation that we are leading into a bullish trend. I mean, let's go to crude oil. I mean, it's going down today, but here's a really nice example how you can use it also for a long-term perspective. Let's just take the, give me 1 second, just let me see. There's the horizontal.
And the bands you have on the crude chart right now?
Moving averages. And I love to use moving average like the 100 EMA on, especially on oil and commodities, where I use on equities 200. But let's have a look here. This is the 48-point level. Crude oil was bullish. I mean, you can see it in the chart as well. But we have been confirmed by the RSE because we never stopped below. We had in October 2021 fake breakout kind of. And you see it here again in August 21. And again on December.
They were always buying opportunities.
They have been always buying opportunities. And that's why I had this in my mind, this chart, and it shows you also on a long-term perspective, a really good possibility how I use this RSI 34 and this barrier at 48.
Okay. Any other instrument you want to talk about today?
No, that's it. Yeah, I'm sporting some seasonal patterns in Forex, and we are here at ForexAnalytix. So Euro, Swiss crowns, use the Japanese yen. So what I do, I spot the seasonal setups or ideas, and then I try to combine them with technical analysis. So somebody
and
who
is this seasonal for like the month or quarter?
Exactly.
For the month, right?
For the month,
February.
right? For February, but you can extend it and look for. These are only short-term seasonal patterns that I'm looking on, but you can also look on long-term seasonal patterns. But what I always say,
the yen will get up to 117.40 then with your seasonal.
Yeah, exactly. And what I want to say is seasonal patterns, please do not trade them blind. I mean, you need always other factors as well to check.
Yeah. Well, Sala, another great interview. And I know that people that have watched you, heard you today live are going to want to know where they could reach you and follow your work. Also, when people see the video after you retweet it. What's the best way on Twitter to get a hold of you?
Absolutely. On Twitter, I'm on a daily basis. I'm updating you with my analysis, with my trading ideas in major English.
Follow Sala.
And follow ForexAnalytix, of course.
Yeah. Follow Sala. Okay, Kareem just did, and he has. You'll learn from Sala. It's not just buy it here with a stop here and here's your target. You'll actually learn some techniques and methods.
Exactly. And if you have questions, guys, please, thank you, Dale, because I love to educate. I learned trading by myself. There was nobody who could teach me. Even I have a master degree. Trading is not something that you can learn only on books. And feel free to ask.
You need a trail guide down the rocky road of trading, right?
Right. Absolutely.
Well, listen, Sala, happy birthday. I hope it's a great year for you. I love having you in the rotation. And every time I talk to you, I learn something from you. Thank you.
Thank you, Dale. Have a
All
nice
right,
one.
so
Thank you, guys.
Saladin Bumudi, follow him on Twitter and learn from a guy who learned on his own. And I guarantee you he paid for it with blood, sweat, and tears.
Definitely.
Like all of us. We went to the University of Hard Knocks.
Right.
So thank you, Sala.
Thank you, Barry.
All right, and everyone, you could join the team in 20 minutes on the Morning Edge, and then the special webinar that ForexAnalytix is having is going to be at 11 a.m. So I'll see everyone. Good hunting the rest of the day, and remember, don't just count your pips, count your blessings. And we'll see you tomorrow. Thanks again, Sala.
Thank you, Dale. Bye-bye.
Bye-bye. Adios, everyone. You're welcome, Alexander, Kareem.